All right, let's just jump right into this explainer and demystify exactly how the SoFi hybrid checking and savings account actually works. Look, if you've been hearing all the buzz lately about digital banking and high-yield accounts, you are definitely in the right place. Today, we're going to break down the exact strategies, the fine print, and those hidden features of SoFi's flagship account. By the end of this, you'll know exactly whether it's the right home for your cash and, more importantly, how to get your money to finally start working for you. So I want you to ask yourself a serious question right now. Is your savings account actually losing you money? Now, I know that sounds like a total trick question, but I promise you, it's not. If you're stuck in the trap of using those traditional, legacy, brick-and-mortar banks, they are more than likely paying you basically nothing on your cash reserves. And when you factor in inflation, yeah, holding your emergency fund or your house down payment in an account that's earning literal pennies means your purchasing power is just shrinking every single day. And this right here perfectly illustrates that massive gap between standard banks and SoFi's digital-first yield potential. Over on the left, your typical traditional bank is paying an average of what? 0.01% to 0.05%. It's almost zero. But on the right, SoFi is offering up to 3.80% for new accounts with their current promotional boost. I mean, that isn't just a slight edge. It's an exponential difference in how your money compounds over time. But, and this is a big but, to get that top number, you have to play by their rules, which is exactly what we're going to decode for you today. Now, before we look at the specific tiers, let's quickly define what APY actually is, because honestly, this is the absolute engine of your wealth. APY stands for annual percentage yield. Put simply, it represents the total amount of interest you're going to earn over a year. But the crucial part is that it includes the absolute magic of compounding interest. At SoFi, they calculate your interest daily and they pay it out monthly. So why does that matter? Well, because every single month, the interest you just earned gets added right back into your principal. That means the very next month, you're earning interest on your interest. It's this incredible snowball effect that just helps your money grow so much faster.
Okay, Section 1, the APY engine. Let's see how this all comes together.
So what's absolutely crucial to understand here is that your interest rate heavily depends on your account activity. Remember, SoFi actually doesn't offer a standalone savings account. When you apply, you automatically open a combined checking and savings account under one single login. Now, if you just open the account and let it sit there doing nothing, you're going to land in the standard rate tier, which earns around 1.20% on your savings. Is it better than a traditional bank? Sure, but it's definitely not maximizing your money. To unlock that sweet qualifying rate of 3.10% on savings, you absolutely must set up an eligible direct deposit from your employer, or you need to move $5,000 in qualifying deposits into the account every rolling 31 days. Oh, and notice that across all the tiers, your checking bucket earns a super solid 0.50%. That is fantastic for the cash you're just using to pay your everyday bills.
But here is where it gets crazy lucrative for new users. If you open your first SoFi checking and savings account by December 31st, 2026, and you get that eligible direct deposit set up within 60 days, SoFi actually bumps your rate up. They slap a 0.70% APY boost right on top of that standard 3.10% rate, handing you a wildly impressive 3.80% on your savings for the first 6 months. It's just a massively powerful incentive to make SoFi the main hub for your paycheck.
Section 2, Smart Tools for Saving. Let's move beyond just the yield. Because look, earning a high rate is great, but a truly optimized financial setup actually helps you save more money without having to rely on sheer willpower, right? SoFi stacks several of these smart features together to make this happen seamlessly. First, you get savings vaults, letting you create up to 20 distinct sub-accounts. You get roundups, taking the spare change from your debit card purchases and just pushing it straight to savings. You've got automatic recurring transfers to passively move money from checking to savings. And if you have that eligible direct deposit set up, you can even access your paycheck up to 2 days early. Guys, these aren't just gimmicks, they are psychological tools completely designed to automate your financial discipline. Let's look at a really practical application for those vaults. Let's say you want to build an emergency fund of 3 to 6 months worth of expenses. Instead of just lumping it all in with the money you're saving for, say, a new car or a vacation, you can create a dedicated vault just for emergencies. It acts exactly like a digital envelope. You can visually track your progress toward that one specific goal without having to go through the hassle of opening a completely separate account at a totally different bank. And honestly, the best part? Every single dollar sitting inside those vaults earns the exact same high APY as your main savings balance. And you can actually supercharge those vaults by using the SoFi debit card. When you turn on the Roundups feature, every single time you buy a coffee or pay for groceries, SoFi rounds that purchase up to the nearest whole dollar and automatically pushes that spare change directly into one of your vaults. It's brilliant. You are literally saving money passively
totally in the background without even having to think about it. Over months and years, those little roundups, combined with that high APY, they turn into real, substantial wealth.
Section 3. The safety net. Let's talk about keeping your money protected.
$3 million. Let that number sink in for a second. Standard FDIC insurance generally protects your money up to $250,000. But through the SoFi Insured Deposit Program, your cash is seamlessly swept behind the scenes across a whole network of partner banks. This automatically extends your FDIC insurance coverage up to an incredible $3 million. You don't have to juggle multiple bank accounts or remember a dozen passwords. SoFi handles all the distribution while you just manage everything through one simple app interface. If you happen to be holding a really large cash reserve, maybe from selling a house or a business, this gives you massive peace of mind.
Now, for the day-to-day hiccups, SoFi handles those by offering two distinct, completely zero-fee overdraft services. The first is overdraft protection, and this one is included for everyone. Basically, if you overdraw your checking, SoFi automatically pulls the exact funds needed from your general savings to cover it, ensuring your payment doesn't bounce. Pretty standard, right? But then there's overdraft coverage. If you have at least $1,000 in monthly direct deposits coming in, SoFi will actually spot you up to $50 on debit purchases if your account hits zero. No overdraft fees, no sneaky penalties. They literally just deduct the amount you borrowed from your very next deposit.
All right, Section 4. Maximizing your account benefits. Time for the game plan.
Here is your actionable blueprint to ensure you capture absolutely every advantage we've talked about. Step 1, open the combined checking and savings account online or right through their app. Step 2, and listen, this is the most critical part. You absolutely must route your eligible direct deposit from your employer, or you have to manually transfer in $5,000 every rolling 31-day period. Do not skip this step, or you're going to be stuck at that standard, much lower interest rate. And finally, Step 3, maintain that activity. As long as those deposits keep hitting your account, you keep the high APY, you keep the overdraft coverage, and you keep all the premium perks.
And hey, if you needed just one more reason to take action, SoFi is currently offering a pretty sweet cash welcome bonus for new accounts. The moment you set up your direct deposit, the clock starts ticking. If you receive at least $1,000 in direct deposits within 25 days of your first deposit, boom, you get a $50 bonus. But if you manage to route over $5,000 of direct deposits in that exact same 25-day window, you unlock a massive $400 cash bonus. It's an aggressive incentive for sure, but you have to be strictly coordinated with your employer's payroll schedule to hit that really tight 25-day window.
So I want to leave you with this final provocative thought. With automated vaults, up to $3 million FDIC protection, and top-tier yield, is your current cash strategy actually holding you back? Honestly, if your money is just sitting in a traditional bank doing absolutely nothing, it is time to make your cash work vastly harder for you. Thank you so much for joining me on this explainer today, and I'll see you in the next one.